Hi and welcome everyone to today's presentation of Flexion Mobile. My name is Stefan Knutsson and I'm an equity analyst here at ABG and covering the service sector and also Flexion as a company. And with me today I have the CFO of Flexion, Niklas Koresar. Welcome, Niklas.
Hi, Stefan. Thanks a lot. So, thanks for this. So I'm going to dive into Flexion Mobile. So if you can have next slide, please. Yeah, so Flexion Mobile is the leading distribution platform on the Android market. So first of all, we're not building games. We're a service company to the mobile games industry. And basically what that means is that we go to the biggest leading developers in the world, and we secure the distribution rights for these games in the stores we work with. We're a London-based company, 66 staff. The founders, Jens and Per Lauritsson from Helsingborg, are still very active in the company. And we have a run rate about 29 million pounds, about 350 million krona. We're EBITDA neutral in the company since a couple of quarters. We work with a revenue share model, and that means that for any revenues that is generated within an app in a store, we share that revenue with the channels and the game developer and us. So we have a very, the model is very aligned in what we want to achieve. History is very important. Company is founded more than 10 years ago. We were leading on back in the Nokia Ericsson days. So we work with the big players like Sony, BlackBerry, Nokia, Orange, Vodafone, EA, etc. And that's very important for our current position. I'm coming back to that. We are in the gaming market, so we're not in gambling, we're in gaming. And on the gaming market, we focus on the mobile segment, which is the biggest segment within gaming and where you see the biggest growth. And on that market, we don't distribute games into app stores. So we focus on Android. It's 85% of the devices out there, in the mobile phones out there. And on that market, we don't distribute into Google Play. We don't distribute into China. So we look at what we call the alternative market. It's still an absolutely massive market. It's fair to say we've grown a lot. So we have about 10x on our revenues since we IPO'd in 2018. So the Flexion train is steaming ahead. Next slide, please. So our position on the market, so the game developers on mobile, they have two distribution channels, Google and Apple, everyone the same. And then they struggle with the rest of the distribution. So we're offering the third distribution pipe to the market. So with us, they can cover the rest of the market more or less effortless. Next slide. And why are we here? What's this about? So basically, as I said, all the game developers are in these two stores. So the stores are heavily overcrowded. There are 4 million apps in each store. So discovery of games is the biggest problem on the market because the game developers is very hard to be seen. So they have to spend awful lot of money on user acquisitions and advertising. And basically, the bigger you are, the better you get. But there's a lot of developers struggling. At the same time, it's very hard for them to reach out to new stores because the games has become very, very complex. And they're very cumbersome to distribute in another channel. So they are kind of maybe half-hearted in one other channels, but they're not updating the games. They don't give it enough love. So they're effectively in these two stores. There is a market problem here, which we have solved. Next slide, please. So what we have done is to develop a full service offer. You can call it a one-stop shop where we are doing all the service stacks needed for alternative distribution. So effectively what we're telling a developer is that, give us the file that you've developed for Android, for Google Play. We then take that file, convert the file and do everything needed. And so basically the offering for us is, give us your existing file, we do everything for you and send you back money without you having to do very much yourself. So it's a very powerful offering to developers. We're the only people in the world who can do that. Sorry. We are a service company, but we're also definitely a technology-based service company. And the underlying tech is that we automatically can convert that game file that the game developer writes for Android. So we take control of that file by effectively hacking ourselves into the file with the developer's permission. And by doing that, we take control of the file and we can add the functionality needed so we can repackage files automatically for all stores. And that's something that's very important because these very advanced games are updated even up to every week, so you can't do it manually. We're the only people who have the service offer and the technology. We have two patents now in the US on the technology and the patent pending in Europe. Next slide, please. So the stores we are working with is the biggest stores outside Google and Apple. So we're very close to Samsung, to one store in Korea, Amazon, Huawei, and also some of the newcomers on smart, manufacturing smartphones like Xiaomi, who's coming out. There is others also coming like Oppo and Vivo. They all have kind of Samsung and Huawei is a 15 to 20% global market share on mobile phones, and these new Chinese players in the Western market, they're 5 to 10%. So our reach here is absolutely massive. So if we deliver a game to all these stores, we could well be on half the world's mobiles. So what we're working on is that together with the stores is to get the users to start using the smartphone's own store here. So the upside is absolutely potential. The drivers for these stores is of course to generate revenue, but it's very much is to build their own ecosystem. The leader is of course Apple, who was a hardware company and has become, if anything, a software company, but someone who still make awful lot of money on hardware. Fantastic model. So these guys are trying to do the same. And you also, so it's very much building your own ecosystem. And take an Amazon. The last thing they want is me as an Amazon user go to Google Play for gaming, because I go in and out of games all the time. Because then I get caught in the Google ecosystem and their advertising. So they want to retain the users. Other big drivers are, for example, regulatory pressures on the two existing stores, but also stuff like market changes. Where it's been mentioned a lot is IDFA, when Apple take control of the data of the users, and those kind of initiatives or changes are kind of forcing the developers to look outside their existing distribution models. So, for example, we have seen now definitely a big increase in interest on what you can do with the stores we are working in. Next slide. This is a slide we get a lot of questions on. People can't really grasp why, if this is such a big opportunity, why are we the only people who are doing this? And the answer is very much the history. And to build the technology, you need access to the games, and really the top end of the games, so the most advanced games. But you can't get the games if you don't have the technology already, and you can't get the games if you don't have the distribution power. But even if you would have distribution power and technology, you wouldn't get any games because you don't have any other games. You don't have any reference when you sell to them. So it's the only way really to do this is start really early, but simple tech, simple technology and channels, and slowly build up your offering. And this is of course what we've done then since 2007 here. So we come now to a position where we are the biggest. And why go with someone else if we have the biggest portfolio in the world of games? So we are building really, really strong barriers of entry. So next slide, please. And this is very much what our current strategy is today about. Yes, we are there to grow our revenues, but revenues is the mean to build a market share. That is the tool to secure the position on the market. So what we're doing at the moment, we're clearly the first mover on our market. We are building, as I said, really high barriers of entry. We have secured the biggest portfolio of games in the world as a third-party distributor. And there is a content on the market that there's a saying on our market that content is king, and we are definitely the king and the emperor at the moment. We also have what's pretty cool actually is that because of the technology, we have access to the games we're working with, and also on a setup where it's very easy for us to integrate new service offerings or trends in the technology in the games. So we are now in a position where we can look at these new trends, and when something is coming, and we're also working with on a portfolio basis. So a developer has 5 games. See a new market trend. Yeah, it's there, but it's not. You can't justify it on 5 games. But we, with 25 games and a very simple setup, can then look at these new trends. So everything we're doing at the moment is to secure this position on the market, to have this really, really unique market position. Thanks. Next slide. So if we look at a little bit about the quarterly results here and our positions, which we released 2 weeks ago. So we now have 22 live games. Is that a lot? There are developers with hundreds and thousands of games. But we are working with the leading games in the world. And so those games alone, those 22 are making in Google Play $40 million. And the reason why I mention Google Play is that that's our kind of reference point, how strong the games are. And we are at the moment generating about 10% of Google Play. So these games on a monthly basis combined in Google Play, 40 million. So that's $500 million annualized. And Google Play is about a third of the market. So that's $1.5 billion IP we're working in. So it's the top end of the game. And what's really, really cool here is that during the last quarter, we secured 4 other, really big titles. And their Google Play value is $36 million. So in this quarter alone, we doubled the potential of our portfolio. And this really shows the model. It's very easy for us to take in new games relatively to build a game. And when we get it right, you get a lot of growth potential in the company. Next slide, please. So going a little bit deeper in what drives the revenue of the company, and going back to 6 quarters ago, we had then 5 leading games, 5 what we call top tier games, and they were about 80% of our revenues, and they averaged per month per game $130,000. And what have happened over the last 6 quarters is that we've grown that average revenue of those games from $130,000 to $600,000 per month. And that is the revenue driver of the company. But if you think about it, we're still only, Google Play is 40%, so we are 4% of the total revenue of this game. So why not go to 10% or 20% of the total market? So there's still a lot of potential. And then when you add another 4 games here with the same potential as the rest, you really can see the growth potential of where we are. Next slide, please. So when we look at the revenue growth, I think it's fair to say, as I said, we've grown a lot. Our compounded rate about 17%. This quarter was flat in revenue growth quarter over quarter, but we're coming out of a pretty strong quarter. Last quarter, we was 20% growth quarter on quarter, and we're also in a quarter when didn't really have very much new games that was driving revenues. And from a campaign basis, we're very much waiting for the 4th quarter, which is, of course, super strong quarter, both November and December. We're still on track we're about 40% year-to-date growth. So the Flexion train is steaming ahead. Next slide. This is for me as a CFO, a very cool slide. Over the quarter, I think we grew over 10% quarter-over-quarter in gross profit. And the cost base, and here I very much look at salary cost because that is the key cost for us. Then we have a fair bit of FX that goes up and down because we are, I think it's fair to say, a truly global company. I think we have sales in 90 countries. So, and that one, the staff cost was down in the company over the quarter. And if we look at this of a longer perspective, we're up 4x on gross profit over 10 quarters, and we're up 25% in the cost base. Over the last year, I think we're up 35% of gross profit and 10% of the cost base. So it's, you can see next slide, is that we are now in a phase we stabilized on neutral EBITDA, and now, is to push ahead and start generating positive EBITDA in the company. Next slide. So summarize this. The existing strategy, which is the green side, it's a super simple strategy. The only thing we're doing is add revenues to existing games. Going from $130,000 per month to $600 and beyond. Add more games. Grow the number of big games from 5 to 9 and beyond. And add more distribution. The last one was Huawei last year, which then really kind of lift the whole revenue potential of the whole portfolio up to a different level. So that strategy is a very large growth opportunities. You get more and more diversification of the games from, you go from 5 to 9 big games. And also, what's something you really start to see here, that it is very painful to build a platform. But when you come there, you get to critical mass. You have a very low marginal cost in the company. I think that is what we start to see. To grow existing games from 130 to 600, the only thing you have as extra cost is a bit of channel management, where you try to get more marketing in the stores, but it's very limited. And now when you add more of these really massive titles, the marginal cost of that is very low. But if you at the same time can actually look at even, we're in a position we can look at even throwing out some of the lowest performing games because they don't make very much sense for us anymore from a kind of margin contribution point of view. And then you can come down to almost zero marginal cost on this. So there is a lot. I think for us going forward, and me and CFO is very much look at both the revenue performance, but also the cost performance. Start to price your cost base in the company to drive your EBITDA going forward. So that's the existing strategy. From a strategic point of view, I think it's fair to say we're done. And so strategically, we're now very much looking at adding new service offers to this. At the moment, we are very good at selling coffee, but if you have that market position, why don't start to sell cinnamon buns and salads? So that's what we're looking at, and that is within, for us, is paid traffic. So the green strategy is organic traffic, where we work with the stores and get free advertising, but paid advertising is now coming to the market, and you have influencer marketing, you have data-driven marketing, you have store optimization features, driven marketing, etc. You have hybrid distribution solutions where you go directly to the mobile without the store. You have direct end consumer features, all stuff where a developer or a third party needs all the functionality that we are providing. So we're the perfect partner to help them with these new strategies. And then you have traditional user acquisition. As I mentioned, IDFA driving developers outside their existing distribution patterns. And why shouldn't we be the go-to party between user acquisition in our stores and these developers? And if you get that right, these developers have unlimited budget. So that's very, very exciting. So for us is to look at, are we building it up internally through partnerships or through, kind of very selective M&A strategies where, small companies, 10 to 30 people, EBITDA positive, and with not too crazy valuations, you can look at maybe acquire to top up that quicker than build it in-house. So that's what we're looking at. So the blue one is very much to put a super turbo on something that is moving very fast already, and also start playing around much more on the margin play, because the green strategy is a revenue growth, low margin business, and here you can look at high margin strategies on top of that. At the same time, as you then will drive the revenues on the green side with those activities. So it's super, super exciting. Thank you.
Perfect, Niklas. I would like to thank you for the presentation and do a short Q&A. And I would like to start with the large game deals that you have signed lately. Do you foresee any difficulties in taking them to market, or will it just be more of what you already have proven that you can do?
The stores are screaming for them. They are, these are games that the stores really, really would love to have. And, so we're working really closely with them with really strong, launch campaigns and marketing strategies going forward. So if anything, I think it's easier to launch these games than the other ones.
And operationally, on your side, you don't foresee any bottlenecks?
It's hard to say. I think the bigger the games, the more organized they are as developers. So I don't know. That's not a problem. These are super professional people, and yes, it's quite easy to work with them.
Perfect. And then you mentioned your barriers of entry for competition, and someone who has the technology is of course Unity. And they do have a distribution offering, but from what I have seen, they seem to be losing out on the distribution channel side. I mean, how do you reckon their competition? Is it something that you worry about at all?
So I've been, first of all, I've been in this company for 8 years, and I've seen a lot of companies coming in. They have some technology or distribution idea, and after 2-3 years they're gone. And we have said for quite some time that Unity, which is a development platform for games, is probably the biggest competitor for us. They haven't had Amazon as a distribution offering, and what we saw was last week. I haven't all the information, but it says on the Unity platform that Samsung has selected to leave them. So now they can't offer Samsung either. And this is, as I said, this is what's happening. You have a lot of parties coming in, but in the end, they struggle to get the big games, and then it doesn't make sense. So it's one more out of many. But it shows, it is really, really complex, hard. But as for us, when you come there, your barriers of entry become stronger and stronger and stronger. So pretty cool.
Yeah, and another risk then perhaps is that your selected distribution channels grows larger. Would that mean that it can incentivize game developers to go directly in those channels?
Absolutely. Of course they can, and some will. And that's the nature of an open, perfect market. But if we are generating a lot of revenue for them, and also remember that we are doing all the work for them, will they disrupt that revenue stream and try to take it over and build up their own team with all the pain that it causes? Some will try, some will fail, and some may succeed, but it's not really a big threat. But the whole model for us is to have a very, it's a portfolio, flexible portfolio. So games are coming in, some are leaving, and then we can take in more games, because the cost and the time for us to take in more games is very, very small. So it's short. It's not a threat. It's just part of how it is.
Perfect. And by that, Niklas, I would like to thank you for coming here and presenting with us at ABG.
Perfect. Thanks a lot. Nice to be here. Thanks.